What's up guys, welcome back to another new YouTube video. So in this episode I'm going to be teaching you a very simple forex strategy that I see happening every day in the currency market. So I'm going to be teaching you how we can find these types of setups. I'm going to be teaching you how you can take entries, how you find your confirmations and all that, so that you can succeed in this forex market. So if you're a forex beginner and or if you have been in the market for some time and you don't know, you have been having hard time on strategies, this is a very good strategy that you can add to your bag, guys. So without further ado, make sure to subscribe to this channel and let's get started with this video. So this strategy, it rotates around price action. So this is a price action strategy. So if you're a forex trader, this has to be like the first thing you learn. This is the first strategy that you learn as a forex trader, because price action is, we're analyzing markets without choosing indicators. So if you're a forex trader, you have to have the ability to just look at the charts. Like you see, this is a naked chart. As you can see, this is a naked chart. There is no indicator, there's nothing. So I'm able to identify, okay, this is an uptrend. I have to be able to identify which market structure is this. This is all price action, guys. So I'm going to be explaining to you price action in the simplest way possible, guys. So let's get started. So as I've told you, price action, we are not using indicators. All we want to use, identify the trends of the market. We want to identify patterns. We can just use a few candlestick, the way candlesticks move and all that for our entries and all that. That's all price action, guys. So my strategy is very simple, guys. This price action strategy. So first thing I want to do is always first identify which trend is that. So as you can see, we had a very nice uptrend here to the upper side. So what do you know about an uptrend? An uptrend, whenever it's going up, it forms higher highs and higher lows. And as you can see, guys, we are on the AUD. We are on the AUD USD time frame. This is the 4-hour time frame, guys. This is the 4-hour time frame. So when a market is going in an uptrend, it can never, go straight. We can never have market going straight like this. We can never have this. Market has to come like this. It has to give us these structures. It has to give us those structures, the higher highs and the higher lows. Because remember, this market is, the battle is between the buyers and sellers. So buyers are always coming in, sellers are always coming in. So since this is an uptrend, so meaning the overall trend is an uptrend, so meaning we're only looking for buy trades. But again, sellers will always want to come in. Again, how does the uptrend market move? The uptrend market moves in this way. It goes up like this, you see, it comes down. Up like this, it comes down. It comes up like this. So me, what I want to do is I want to identify a reversal so that I can take trades when market reverses. But how do we do that? So first of all, we have to first identify the higher highs and higher lows that the market forms. So these are, as you can see, this is a higher high right here. Then this is a high low. Then this is a higher high. Then this is a high low right here. And this is a higher high. Quite of a high high. And then around here maybe. That's a high low. Until now, again, another higher high up here. Until market now, they break our structure. You see? Our structure is being broken from here. So this is what we have, guys. So we need to, as now we know that market, when it's going in an uptrend, it forms higher highs, higher lows, higher highs, higher lows. So we need to first give this market direction. So this is the direction I have to give this market. See this is what we have. You see, market was trending in an upward. Well, from this, how you know that market is an uptrend. If you don't know how to identify if a market is an uptrend, this is how it looks like. You see, yeah. But now all I want to do is just identify a reversal. So now, as you can see, market was in an uptrend, giving us higher highs and higher lows, higher highs and higher lows. So what I would do, you see up here, market reached a time and reversed. So meaning this is no longer a higher high. You see right here. So market reverses and starts forming lower lows and lower highs, lower lows and lower highs. So my thing that I just want to identify a pattern. I want to identify a pattern. a reversal pattern. We have very many reversal patterns, like a rising wedge and a heads and shoulder. We have double bottom, you know. So right here, what I'm seeing a pattern that is called I'm seeing a pattern that is called heads and shoulder. This is the heads and shoulder pattern, guys. As you can see, this is the heads and shoulder pattern that I'm identifying as my reversal. As you can see, this is my heads and shoulder pattern, guys. So a heads and shoulder pattern, it's a pattern that it's for reversal. If market has been in an uptrend form, you know, if market has been in an uptrend form like this, and we have that pattern form, market is going to reverse and come to the downside. We're going to have market coming to the downside. So when we receive our pattern, which is the heads and shoulder pattern, what do we do next? So whenever I have any pattern, we have to draw a neckline, mostly on the double top and the head and shoulder patterns. We draw always the neckline. So our neckline has to be the part where market has to break, so that we can see a retake. I mean, that's so we can see an entry. So we can see an entry point. So this would be my neckline right here. See, this would be my neckline right here. So I'll draw here something like this. So this is what I would have. So this is what I would have. So this is my heads and shoulder pattern. So since market was forming high highs and high lows, now how do we know that market is going to reverse when it gives us such a pattern? But there's another way how you can know, okay, market is going to change in direction. So I'll show that as the last part. But so far now I'm just going to give you the I'm just going to be giving you the head and shoulder pattern. So when market, all we want is market to break here. So you want to come into the smaller time frames to find your entries, because you know you can't just find entries on the bigger time frame. You want always find entries on the smaller time frames. So I'm coming back this side. So this is where I want to find my entry. This is where I want to find my entry. So exactly, you see what we had here. We had like this big red candle. Actually, when market broke out, you see market broke out, and then we had this green candle close out, and this is like even this is like a this is like a, I don't know which type of this candle is, but the body is pulled down. So this is like one sign, and then this other red candle it shows much pressure from the selling side, and then this green candle, when it appears, it's not even big, it doesn't engulf or anything like that. But now when this big red candle appears, it's engulfing both this green candle, so which is a very good reversal sign to the downer side. So definitely you would take trade there. So if you are to take trade there, let's go back to the bigger time frame. We want to mark out our stop loss and take profit and all that. So our stop loss, we don't want always, you know, actually whenever we are trading in the market, we have to always have a stop loss, because the stop loss is we're willing to lose that money if market goes against us. But if you go into profits, we definitely make money. So how do you measure your take profits on a pattern like this? You select your measure tool, select this angle here. You see, from here to where the head is, we can see that's 125 pips. You see, you measure this distance from here to here to measure your target. Market at least has to form that first target before it's doing anything. So what you do, you measure the same distance to measure your take profit. So this is 125 pips. So this is 125 pips, guys. 125 pips. 125 pips. So yeah, this is 125 pips, as you can see. So market has to form this, and you can see market formed that before even forming this first green candle. As you can see. So you take trade there, because you know when market is in an uptrend, when it reaches the time of reversing, we look out for reversal patterns only. Heads and shoulders, we look out for divergence and all that. And if we are to apply here our divergence strategy, you would see that okay, market would form divergence there. And you see that market would form divergence there. But I'm going to show you that divergence on the last part. But right now we're still onto this pattern. So guys, let me enlarge this screen so that you can see everything very clear. So this is what we have, you see. a very nice setup without using. This is without using indicators or anything, but I'll just use an indicator just for you to see, okay, to have like a proper confirmation, you know. Yeah, but as again I'll tell you guys, I'll tell you again, guys, price action is key. Being able to identify market moves with just your eyes is the best thing, guys. It's the best thing. So when market, you see, as you can see, the reason why I would take target here is because I measured this point from here to here. And again, also, when you always look at this side, market, wherever market has been, like it will come back to that same level. As you can see, market was here, you see, market was here in this zone here, market was in this zone here, as you can see, see, market was in this zone here. So this should be a very good part to take. You take profit, you see, your first take profit. Then again, you know, when the market is going in a downtrend, it has to give us those lower lows, lower highs, lower lows, lower highs, you know. So that's all, guys, price action. But you have to practice price action more often so that you can really learn the skill. Because, you know, price action, it rotates around market structures, you know. It rotates around, you know, mastering the candlestick patterns on just your fingertips. All those candlesticks, you need to master them on your fingertips. You need to master the forex patterns on your fingertips also. Then also you need to have a little bit, actually you need to have as much area 12 theories as you can, because area 12 is very, very key. Because if I was to apply here area 12, everything would work out as I want, guys. So this was just price action using candlestick patterns and all that. But let me remove this and then show you another simpler way. So again, this is our market. As you can see, we have an uptrend. So whenever you find this market like this, just execute, guys. Execute in the simplest way possible by using price action. So this is what we had, as you can see, even by just drawing an uptrend like this. So remember, guys, I've been preaching about this many times in my video. Whenever you have an uptrend, always draw your two lines, or always draw your trend line. The trend line, it just helps us with the direction of the trend. So, and you know me, I always love to use two to make a channel, so that you take the opportunity to always execute in between. Because remember, when the market is going in an uptrend, we are only looking for buys only, you know. So these are impulse move, retracement, impulse moves, retracement, impulse move, retracement, impulse move, you know, until the market, you see, market now changes. You see, it now changes. Yeah, it now changes direction. But again, so this is what we want. If I was to use another way to trade this market by not using the pattern that I used, the pattern that I had used was the pattern that I had used was a heads and shoulder pattern. But now, so this is what I want. You see, we have market forming our higher highs and higher lows. Now, when market came to this level here, we had the breakout. You see, we had the breakout. We had this breakout here. So when the market broke out, it went back up to form another high, which is this one. You see, but it's not higher than this one. So meaning that's just one indication for a reversal. That's just one indication for a reversal. But again, whenever you see a breakout, we just wait for the retest. Whenever we see a breakout, we wait for the retest. But to one of the best ways to see, okay, market is going to reverse, I love to use the divergence. So I'm just going to use a little bit of the divergence and then see. So this is where I see the divergence right here. You can see right here, you see? Right here. This is where I see the divergence. And remember, divergence just means we need to have this upper move. As you can see, we need to have this upper market going up like this. We need to have market going up like this. And then we need to have market going down like this on the indicator. Yeah. So this is like a confirmation. Guys, remember, this is all price action. We don't use indicators, but if you use an indicator, it's not a crime. It's not a crime to use an indicator, guys. So that is just like enough confirmation for you. But when you use this strategy, like when you use this last part, it's even more simpler, because you take the trend from like up here, you know. You see, because you see we have the a breakout, retest, then market is starting to drop down. So here just look out for confirmations. Now like this candle here, this is a hammer. You see this is a hammer right here, guys. This is a hammer. This is like, this would be like a good confirmation for you to take this trade. That's a hammer right there. You see? So you take trade there, because remember this is like a reversal and this is the 4-hour time frame. Guys, I hope this video was a very nice one for you to learn price action. And if you're a beginner trader, just try to learn price action, learn candlesticks, learn from the basics, candlesticks and all that, in so that when you reach a time of using indicators are just like confirmation for you. Indicators shouldn't be your major things to take trades. They shouldn't be your major points to take trades. Price action has to be your major it has to be your major points to take trades. Guys, I hope you enjoyed this video. Make sure to subscribe, turn on your notification bell, because I'm bringing in more and more content for you guys. Stay blessed, God bless you and all that, guys. I'll see you in my next video.